The UK's decision to leave the European Union sent shockwaves through world markets last month, but as we've moved farther into July, some of the initial panic appears to be subsiding, and we're seeing technical signs that the pound may be putting in a bottom here. The vote created a lot of immediate political uncertainty and immediate market uncertainty. The markets were dead wrong on this one, and we had not only the markets had to reverse their speculation, but then price in the implications of a potential Brexit. We also had what looked like was going to be a drawn-out leadership contest for the Conservatives. That's now ended. We now know who's in charge. Theresa May has come in as Prime Minister, replacing David Cameron. Philip Hammond has been appointed as Chancellor of the Exchequer, replacing George Osborne. Boris Johnson has been appointed Foreign Minister, as well as a number of other key Brexit figures from the Leave campaign have moved into significant roles in the new cabinet. So people can now start to look at wondering less about who's going to be in charge and more about where does Britain go from here. We're also seeing some supportive comments from the UK government, starting with Chancellor Hammond, who's come in and we'll recall Osborne had said he would bring in an emergency austerity budget. There's no emergency budget. The UK is likely to back away from austerity, and at the same time he brought in he will do whatever it takes to support the UK economy, although it's more likely we'll see more details from him at the usual August fiscal update. Meanwhile, today we had the Bank of England meeting, and Governor Carney also decided not to hit the panic button on interest rates. He's decided to wait likely for the next meeting in August, which is 3 weeks from now, to decide, give them the Bank of England more time to assess the impact of Brexit and what steps need to be taken. So rather than rushing headlong into something, they are taking time to have a plan as to where to support the UK economy. As it is, the big devaluation in the pound provides quite a bit of monetary stimulus already to the UK. So the Bank of England does have some time to figure out what they want to do. It also gives them time to actually meet with the Treasury, because Chancellor Hammond was just appointed overnight, and they were just getting a chance to start to meet each other. Gives them a chance to come up with more of a coordinated response, and in terms of what measures do they need to take now, what can they say through just talking about support, and what can they leave as a backup in case things start to go awry. And we're starting to see this bit of confidence returning to the marketplace, and in particular we're seeing it here in cable, the pound US dollar pair. It of course was crushed initially, and we did see a wave down, but we're starting to see some really interesting technical basing signs appear. It looks like we may be forming a head and shoulders bottom. This initial dip under 132 seems to have carved out a left shoulder. The big drop down to 127.80 appears to have formed the head of the pattern, and now with it back above 130 and a bit of a correction here, and now a dip and starting to rally again, not only are we getting a bullish engulfing candle, but we may be starting to get a right shoulder forming as well. We've got support moving up from 130 now up towards 131.50. First resistance in here around 133.13. This is a 23% retracement of this big downswing here. The 38% retracement is around 136.35. This will be significant when I show the next couple of charts. And the 50% retracement would be up here about 139. I'm going to move now and show how the pound is reacting against other currencies, in particular against the Japanese yen. The sterling has got a big turnaround going against the yen, which I'll show here now. As we saw, similarly, had the big drop. We had a decline here, got quite oversold. We're already seeing a technical rebound. We've well cleared the 23% retracement around 136, and has bumping up against the 38% retracement near the 140 round number. It's actually peaked above it, so we'll see if this becomes resistance or if it continues to blast through. Upturn here in the RSI suggests a downward pressure easing and potential for an upturn in momentum. Initial resistance here about 142, and this 50% retracement level closer to 144.50. I'm also just going to show a couple more charts here. We have the euro pound also continuing to roll over, and we'll see here the same sort of thing. Similar, we've got this completed a 23% retracement down to about 83.90. Actually has bounced off the 38% retracement near 82.45. The 50% retracement is down around 81.25. And what does this mean for the FTSE? Well, what we're seeing here is that we could see UK stocks start to level off and come back. Stocks, as we commonly see in Japan, UK stocks have been trading in the opposite direction of the pound. The big devaluation in the pound was seen as doing two things. One, it put UK multinationals stocks on sale relative to their peers, and two, it was seen as monetary stimulus. So when we had the pound crash, we had an initial downswing in the FTSE, but that didn't last long, and then we've had this big run up in the FTSE here from 6,000 to 6,700. We did peak just above it here in what might be a buying climax. We're starting to level off here in this 6,600 to 6,740 area here, where we may digest some of these recent gains. If we do get a bounce in the pound, we could see some of the a bit of a pullback or retrenchment in UK stocks as they move in opposite directions from each other.